Hi guys, welcome back to another video by mykayaplus. My name is JP and together with me is Chun Bing. So of course, if you have watched the first video where we go through the key KPI metrics of measuring the efficiency of an airline company, automatically you will be redirected here to the second video, which is where we utilize what we learned from the first video and then apply it to analyze AirAsia's or capital A second half 2022 results. And of course, if you went through the results reported by the company, you will see that the keyword highlighted here is "we're back." So by Tony Fernandez. So we will go through whether how true is that in terms of the results by analyzing from a neutral point of view by the eyes of a retail investor. Of course, there might be some opinions and reviews that are personal to us ourselves only. It might not constrain you to do any buy, sell, hold decisions, and please do your further due diligence before you actually make any investment decision. So we will move on to the sharing as of today. So of course, we have mentioned in the first video, when you look at capital A, it has actually grown from just a pure aviation company or airline company to becoming an ecosystem of its sorts. So it still has the aviation or airline component, but apart from that, there are other supporting strong pillars coming out within the group. So you have your e-commerce in terms of AirAsia Super App. You also have financial services like BigPay, the logistic arm, your teleport services, and also the engineering component that helps to service, prepare the airline companies' air fleets, and also help to do it to third-party companies as well. So let's go into the main component or the overall overview of AirAsia Group or Capital A's Group. So you can see that the first and most important aspect achieved by Capital A is that they finally turned EBITDA positive ever since the COVID. So this is a company got badly affected by the pandemic. Airplanes literally stopped flying, and then the company also has a very tough, went through a very tough period of time. But now, since that everything has reopened, so there is good news to Capital A shareholders, right? EBITDA positive. And then, of course, another concern that the company has been facing was that the company might not have enough cash to sustain the operating expenses. Even though airline stock business came to a standstill, but there were, expenses and overheads that the company need to pay out, and that was slowly burning and utilizing the company's cash position. So the company also have undergone major, capital raising exercises and even increase their loan to actually help sustain the company overall health, and then having to achieve operating cash flow or with a positive note means that the company can bring in enough cash to offset some of their expenses, right? And of course, they also reassured that all the staffs that were affected by the pandemic that they had to put on, temporarily put them out of job, but now they have actually slowly rebuilt back their so-called fleet, their captains, their flight attendants, and so on and so forth. So this was also what they wanted to highlight. And then last but not least, there was a previous litigation event with MAHB, but it has since been discontinued, and there's no more ongoing litigation cases with Malaysian airports, right? So this is the key general overview. Then zooming into aviation, you can see that aviation is a clear recovery in sight, where you can see that the revenue on a Q-on-Q basis or year-on-year basis increased by 475%, and the load factor, meaning to say that how many seats were there and then how many seats were managed to sell off to passengers who opt to buy AirAsia tickets. So they managed to achieve 84% load factor. And of course, the revenue per available seats per kilometer also grew by 73%. This means that not only they managed to sell their available seats to more customers, they also managed to increase the ticket prices as well. That's why the revenue increased per available seats and kilometer. And of course, that overall contributed to a positive EBITDA, right? It means that the company is finally churning out some profit after the pandemic. And then the CAS, which is the cost per available seats per kilometer, also went down. So when you are flying more frequent, right, each ticket is bringing in more revenue, automatically it will help to offset the cost. That's why you can see the CASK or the CASK coming down significantly, because previously you still need to pay good salary to your captains, to your flight attendants, but your flight is not that frequent during the pandemic period. But now, since we open already, you can see that the CASK actually came more significantly, right? And then, of course, what they want to target is actually to lower the cost without considering the fuel aspect of it, right? Meaning just to focus on the manpower part of it to 20% lower to pre-pandemic levels. That will give the aircraft to churn out more profitability and more potential net profit to the shareholders, right? Of course, there are also expectations that the fleet size will increase, and that will overall push the entire KPI or metrics to help AirAsia become or help the aviation company business become more efficient. Right. Of course, when you look into Capital A Berhad, it's not just Malaysia Asia, because there are also other subsidiaries within the group. You have your Malaysia Asia MMA, Thailand Asia TAA, Indonesia Asia IAA, and also Philippines Asia PAA. So you can see that managing the efficiency of the entire airline business is all about ensuring that in terms of the capacity to load more passengers, and also having passengers to continue flying with Asia must tag along in a very close manner, so that whenever you have additional capacity, so your passengers also will be happy to buy and choose to fly with Asia. So it must be a close apple to apple kind of growth, so that in the event there's available capacity, you can also churn out more revenue per available seats and also passenger. It's no point that Asia can continue to increase their ASK, but there is no ticket sales. That would be a very mismatch in terms of that, and you will see that the cost will actually go up from there. So it's important to see that the airlines are actually planning to increase and stabilize the capacity deployment so that it is aligned. Right. So that is basically how you analyze the aviation or the airline component of Capital A. I'll pass it on to Junbing to talk about their next revenue vertical.
Yeah, I think it's also important for you to understand the other ecosystem that Tony Fernandez tried to build around Asia, or I mean, right now they rename it as Capital A. So one of the small business pillar is actually called as ADE, or Asia Digital Engineering. So what it does is basically offering the comprehensive portfolio of aircraft services. So basically, your aircraft need maintenance, your aircraft need services, upgrade components, so on and so forth. It's also part of the services offered by this department. And then what is important is they are actually also looking, beside maintaining for their internal flight, they also plan to actually have a 5-year target to use the services to serve third-party customer, meaning they are actually able to provide the MRO, or the definition is actually maintenance, repair, and overhaul services to, let's say, the other airline like MAS, so on and so forth. And then, of course, other than that, due to the recovery of the travels, all these things come along, you can see the revenue actually grew quite well. The same goes to the EBITDA. Of course, another pillar that is interesting during pandemic is the so-called the teleports department by Asia. So what does it mean? Is basically somewhat like a plan that actually stirred up during the pandemic to actually repurpose the cargo basically, I mean the flight they actually used to carry the passenger, they changed it to cargo only flight, and then to actually utilize some of the flight they had, some of the plane they have during pandemic. But of course, even though the delivery volume grew a significant figures, 630% year on year to 1.15 million. But then you can see their revenue performance and also EBITDA performance is actually dropping due to the fact that travel has been coming back. And then, of course, the plane should be repurposed back to what they're supposed to do, which carrying the passenger. So you can see this is something that we need to also continue to monitor, whether they will continue to grow the this segment of business. But of course, they are expecting a better performance for second half of 2022 due to the air travel recovery. What does it mean? Is basically Now the plane is actually able to carry the passenger, and then alongside they also utilize the cargo to carry some of the products for delivery purposes. Of course, the cost is somewhat managed and then taken care by some of the passengers. That's why the cost base can be managed. Of course, it will be reflected in a positive manner for the revenue and also EBITDA in terms of effect. But we should continue to monitor. The next one is one of the key highlight they actually showing up for this quarter is they are saying the super app that offered by Aviation is actually turned EBITDA positive. And of course, beside the revenue performance, EBITDA turned positive. All the other key indicator also show a very positive sign. For example, their monthly active user is actually grew by 236 percent to 10.6 million users. And then of course, if you think of it, they are trying to actually repurpose this whole application that originally is to serve to serve the traveler. So now within Asia Super App, it's not about flight booking, buy for additional cargo size, so on and so forth. You actually can also go for ride hailing, order for foods, or is all the other services has been slowly included into this so-called Asia Super App. And also recently they have actually launched the e-wallet features. So it's kind of like exciting space to watch on. And then Tony Fernandez did express his interest to actually decouple this super app itself and then get it listed in US stock exchange. But we shall see what is the progress moving forward. And then another thing is that is also quite interesting is their fintech arm, which is BigPay, that actually, if you are a frequent traveler, you will like their services. Basically, you can use the cards and then get a very good remittance rates, a very good foreign exchange rate. You can actually use the card to straight away withdraw from ATM in the foreign land in a very good rate. So the number itself is actually showing a good year-on-year performance in terms of revenue, but they are still losing money. And some of the key highlights for the existing quarter, the latest quarter, is basically beside doing all the remittance, what they are good at, they also launch the lending products, which so-called you can actually get a quick unsecured loans within 2 minutes. So this is all the key highlights from the different business segment. But of course, the important thing is what is the financial performance that Jupan will actually take you through.
Right. So of course, if you look at the many initiatives that Big Capital A has launched to actually help transform it to become a ecosystem of its own, but at the end of it, if we look at the financial numbers, at the end of it, it's still a very airline reliant company. You can see that in terms of the total, component wise, you can see that the contribution coming from aviation is the largest. No doubt, in terms of contribution from engineering, super app, big pay, they are slowly helping Capital A become a more diversified company. But as of now, we are talking as of now, it is still a very airline reliant company, right? So do not take the so-called fintech and also the so-called super app component really seriously, because it still needs a lot of time to actually grow to before it becomes a huge component or significant component of Capital A. Then only you can, strongly and proudly say that, oh no, it's no longer an airline company, it's now a super app company. As of now, based on the financials, it is still an airline company, right? So of course, that is just from the breakdown of revenue and also the EBITDA. But if you look at the latest financials, right, you can see that in terms of the revenue, it has shown improvement. And then of course, in terms of the operating income, losses have significantly reduced by roughly around 30%, I would say, right? Close to 30%. And then last but not least, one of the key, one-off losses that the company is still actually experiencing would be the currency exchange loss, right? So because Capital A operates in so many different parts of the countries, at any one time they might be holding multiple currencies, and whenever they need to report their quarterly results, they need to revalue these currencies at fair value and then report it to Malaysian ringgit. Because the company is actually listed in the Malaysia Stock Exchange, everything is reported in ringgit, so there will be some currency exchange losses which is captured right here. So if you just want to gauge the operating profitability or loss, you can see that it has came down from 689 million to 482 million on a preceding quarter basis. Right. Of course, one other aspect that you should take note of when you look at the balance sheet of Capital A would be the inflated amount in terms of long-term debt. So this is a company that got into some trouble during the pandemic because some expenses and some overheads need to continue to be paid, need to continue to be honored. Hence, the company was in need of cash back then, and there was even a period of time where retail investors and even analysts are afraid that the company might run out of cash and turn into an illiquid company. So there was a period of time where Capital A Berhad was considered a PN17 company. And to actually overcome that, the company undergo capital raising exercises, right? Doing rights issue, private placement to certain investors, and also they actually went into long-term debt. So you can see that on a preceding quarter basis, the debt actually grown significantly, right? So they are actually now at a very highly leveraged position. And of course, looking at the cash flow statement, you can be well reassured that on the momentum of renewed increased revenue and also lesser operating losses, at least you can breathe a sigh of relief if you are a retail investor of it. Capital A is that the company is slowly bringing in cash from its operations, right? So some of the expenses are not cash kind of expenses. So if you technically neglect or take that expenses out in terms of cash point of view, we can see that the company is actually finally producing some cash from its operations. So the worry that the company might become a liquid company is actually coming to an end, possibly, right? But other aspects will still remain, other concerns will still remain. But in terms of being illiquid, it is far from being a safer position right now compared to previously. Right. Last but not least, let's talk about some of the important valuations. So, of course, if you look at the trailing 12 months, the profit margin will still be negative. In fact, the PE will also be negative region because the company has just reported huge losses based on the trailing 12 months annual results or the 12 months cumulative kind of quarter. So, it should be a looking forward kind of view, even though the first and second half quarters is still loss making, but at least in terms of the negative P, it should reduce. And if things were to continue to improve for Capital A, you can see that probably miraculously it might even break into a positive PE if you take the upcoming final 2 quarters into consideration. Right. I think one important point that I do not see a lot of investors, analysts talk about would be the loan stock component that can actually play a hit or miss effect on Capital A's share price movement. So you can see that even though things slowly recovered from a lot of KPIs and from a lot of aspects to Capital A, but in terms of share price movement, it has not moved a lot for Capital A. So a lot of investors and maybe a lot of institutions are a little bit concerned on the loan stock component coming to play for Capital A, but this is a very, very technical and very, very complicated simulation that will need to be done, which we will leave it to a future video. And of course, if you are interested to know this video, you will need to help us to share this video, like it, and then share it to as much people as we can. And hopefully when this video reaches 2,000 views, we will finally divulge this simulation to you guys. So it will take into some scenario making, and then hopefully we can come up with a logical estimation of what the fair value of Capital A stock would be involving different kinds of scenario. So I think that would be it for today by going through and sharing with you guys the so-called analysis and also the results of Capital A for second quarter of 2022. So anything you want to add on, Chun Ping?
No, I think pretty much straightforward. If you just view it from an aviation perspective, the rest, besides Super App giving a very good EBITDA positive kind of key highlight, but it didn't play a very significant impact to the overall result. Of course, other than that, if you're interested to actually have someone to analyze on your behalf, give you facts and figures, we are actually having this Kaya Plus Premium Clubs. It's a subscription services where after you actually join the club, we will invite you to a private groups where we will actually share all the latest articles, all the exclusive articles, stock analysis, so on and so forth, private discussion within the group. But other than that, beside the private discussion, is we will be also actively sharing the trade alert where when we find there is a logical time for us to buy and sell personally, then we also share the thesis behind the scene. But on top of all this is our flagship products where we actually will do some stock selection on a yearly basis to actually give our top 10 stock selection of the next year. And then these some of the performance that we managed to generate during 2021, which is very in line with S&P 500 and also NASDAQ. And of course, if you are interested in particular industry, then we also have our thematic related events and all these things, even though it's a past events, when you join us, you will be given the complimentary access. So you can actually see what is the deep dive into the ecosystem of electric vehicles, what is the view that you can actually see from and the low stream to upstream kind of things for semiconductor industry. What happened in the e-commerce space? What happened in the cloud space? What happened? What is the thing that you can take advantage from a REIT to SMCG related stocks? So these are some of the things that we cover, which I think will be very beneficial for both newbie and also people that are very busy, don't have time to do analysis. You have us behind the scene.
Right, so I think that's about it for today. So we hope that we help you analyze and take a deeper look into AirAsia's results, and hopefully also kind of understand how to measure, engage, and judge Capital A's aviation business model, because it is still the most important component of Capital A's entire business. So if you like this video, do not forget to like it, give us a thumbs up. It really does a lot to support us, and share it to your friends and family and relatives. Of course, if the video hits 2,000 likes, we'll be more than happy to talk deeper, to come up with a different video and talk deeper on the loan stock component, how that can actually affect Capital A prices, not just for this year, but also for the next few years, because it is going to be a 5-year, 6-year, 7-year kind of event by taking a look into the loan stock component that Capital A came out. So I think that's it for today. We'll see you in the next video. Take care. Bye bye.